Okay, everybody, it's still me. I swear it's still me. Gregory Mannarino, post-market wrap-up on this Wednesday, July 6th, 2022. Wow. Wow. What am I talking about? Not any big rally here in the stock market, which of course did have another miraculous turnaround. Nothing major. We went from being, lower to, of course, higher after the Fed minutes. Oh, we're going to talk about the Fed minutes in just a bit. But the wow is the 10-year yield. What happened with the 10-year yield? Actually, the whole entire yield curve is screwed up. We're going in and out of yield curve inversions. A clear sign, yet again, that our economy is, I'm going to give you two words, dog shit. Yeah, dog shit. I guess you could combine it into one word, but I don't think that would actually be real. But whatever you want. So anyway, the 10-year yield between yesterday and today put on 14 basis points. 14 freaking basis points, people. This is what is going to happen. This is what's going to happen. Let's just back up a little bit. You remember what happened? Bam, 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 bam. We watched a rapid, uncontrolled sell-off in the debt market. Stocks cratered several days. ECB jumps in here, emergency monetary policy, which they have expanded on. Federal Reserve, unconventional policy to try to stabilize the debt market. It's not going to work. Eventually, and it could be any time, it could be any day, we're going to see yet again, bam, 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 in that 10-year yield, and this stock market is going to take a hit. Of course, we do have the Fed that doesn't buy stocks. You know they don't do it. No, because they tell you, and whatever they say is always true. Yeah, and we're going to talk more about that too. I have 2 pages of notes that I was just, putting down. I'll cover that with you in just a little bit. But I just want to highlight a few things here. So on the back of a market with, an interesting turnaround, crazy move in the 10-year yield, which may just be a prelude for yet another sell-off. And what's going to happen? What do you think is going to happen? Do you believe that they're not going to be increasing emergency monetary policy by the ECB, more unconventional policy by the Federal Reserve? Oh, yeah, they are. And guess what, people? This is massively inflationary, but you're not supposed to know that. You're supposed to think that the Fed really cares about inflation. That's what they did say today in the Fed minutes that came out. Before I get there, because I do want to focus on that, let's look over again at the lovely comparative strength of the dollar, also known as relative strength, higher yet again. No secret to you. I've been explaining that we're going to see this phenomenon here for a while. And I sincerely believe in the current environment, being that the US dollar remains, for now, the world reserve currency and the prettiest belle at the ball, you will see the relative comparative strength of the dollar go higher than it is even now. And what is that going to do? Well, let's reflect on that. Commodities in aggregate are priced in dollars. I think that's pretty much common knowledge. With the comparative strength of the dollar rising here, well, that's going to put pressure on commodities. Crude got hit again today after being higher. Gold got hit today, about 1 point something percent, 0.3 maybe. Silver put on a slight gain. This phenomenon with the dollar is going to go on until when? It doesn't. That's another thing, kind of just like the freaking freak show stock market, but okay. That's a whole other thing that we cover every freaking day. I want you to keep your eyes on the 10-year yield. Watch for another uncontrolled sell-off. I really believe it's going to happen, and you're going to see more action from central banks. Massively inflationary. You're going to see another thing too. The repo or overnight swapping of debt. That's really what they're doing. These are swaps, okay, that the Federal Reserve is involved in, where they are, giving the illusion of more liquidity in the system. Understand, we're going to face a liquidity crisis. The Federal Reserve involved in this repo scam in the tune of trillions of dollars every night is just faking liquidity. It's tricking the market into believing that there is more liquidity than there is. You understand? I think you do. I've covered this at length many, many times. So with that said, let's go throw an eye over at Bitcoin. Still hovering around 20,000. It's been stuck here for a while now. Let's see what happens with cryptocurrencies, people. I don't own any right now, but I do plan on getting back in here. Not yet. You will know when. If you subscribe to my free newsletter, link in the description of this video, I'm going to blast it out to everybody on my newsletter, okay? I'm also buying shares of JEPI. JEPI. Okay, I've been buying this as of late. I did put this out in my newsletter as well. Not today. I bought more shares today. Pays an incredible dividend with exposure to the market on the upside, invested in low volatility assets. I think it's the place to be in this kind of an environment. But again, I am not telling you to buy or sell a darn thing. I'm just telling you what I am doing. Okay, I've gotten myself in enough trouble with this with certain agencies. I think you know what I'm talking about. So anyway, what I would like to do here is this. Let's cover the Fed minutes. There's a little segment here that I wrote down, and I want you to pay attention. So the Fed minutes, Federal Reserve is very serious about containing inflation. Containing it. Where have we heard that word before? Containing. Oh yeah, the subprime explosion under then freak of freaks, Ben Bernanke. Oh, he contained it pretty well, didn't he? Oh yeah, the whole world almost melt down. But this guy, he gets paid like $1 million per speech. Oh, how does that work? Cause the whole entire world to go into some kind of a financial meltdown, and then you could earn $1 million per speech. Oh yeah, it's very simple. Yeah, absolutely. Just become a criminal of the highest order. And you too can earn $1 million per speech. Now, so yes, the Federal Reserve is very serious about containing inflation, and it may move to a more restrictive monetary policy if appropriate. I love that word. Those two words. If appropriate. If appropriate, we're going to do this. If appropriate, we're going to do that. Oh, how did they miss their 2% inflation target by like exponents? We're over almost 9% because it was appropriate. You see, because they're trying to strangle you to death. But I think you already know that too. But it's appropriate. It's the appropriate thing to do. Fed Chair Powell himself, he'll tell you it was appropriate, and no one's going to be held to account. Do you think for a nanosecond that someone will be held to account? Oh, no. Look at Ben Bernanke, $1 million per speech. I think it's more than that, maybe 3 million these days. Oh, just bring the world to the brink of meltdown, actually cause a meltdown, and then you too could become a millionaire in one lovely speech. Make it up. Make something like that up, honestly. Oh, yeah. So a couple of other lovely things today. I want you to hear this. Pay attention. This is the headline here of the Wall Street Journal. Peak inflation is not here yet. I believe that deserves a simultaneous freaking duh. Okay, let's all do this together on 3. You ready? 1, 2, 3. Duh! Duh! Oh, I feel it. I feel it again. It's happening. Wow. Okay. So, there's a couple of lovely things going on. Now let's move forward here. This is even just beautiful. U.S. right here in this, in a nation controlled by the freaking media. Yeah, we went over that recently, right? Brainwashing the people on an epic scale. U.S. business growth just slowed to a 2-year low. Oh, And that's what they're letting us know. But tomorrow it'll be something different. Believe me, they're going to tell you one thing, then they're going to say, oh, no, that wasn't really true. We're going to tell you the truth today. That was a lie. This is true now, and then we're going to tell you in a couple more days that we're telling you right now is also not true. But you see, that's just the way it works when you're in this kind of a sick, twisted, demented environment. You understand? Anyway, so your business growth is slowing. Oh, really? You mean we really are, our economy really is contracting? You think things really do suck on an epic scale? Oh, okay. Anyway, here's another interesting bit of economic news that you're going to love here. So the real estate market is cratering with mortgage applications down 28% from their peak right now, and with new home sales down 17% from their peak as well. My advice to you, those of you that follow Chuck, hashtag Ask Chuck, go check Chuck out, okay? And ask him about this. He's definitely a little more up on the real estate market. In fact, I would say a lot more than I am. But this is just what they're letting us know. They're letting us know. Anyway, that's the story, people here. A pretty profound move, in my view, with regard to the 10-year yield. I want you to keep your eyes on two things right now. Number one is always going to be the debt market. I realize what's happening to the yield curve, all these lovely inversions occurring. Okay, all right, no surprise. Do you need to be shown yet another sign that our economy is dog shit, maybe mixed up in a hot pot full of stirring up, stenching, wretched cat shit, bird shit, and then they're going to make you drink it? You know how it works. That's what they do, yeah. Do we need to see yet another sign that our economy is in free fall? But again, we're doing so great. Oh, ex-President retard Bidenstein Frankenstein mummy man. Mummy man! Let's just pop that in my mouth. New name for President Joe Biden. He's Mummy Man. Because I really think he looks like the freaking mummy. And Frankenstein, who are both played by Boris Karloff. I mean, I think he's like the offspring of some thing that, the bastard child of Boris Karloff. And I don't know, the bride of Frankenstein. You let me know what you think. It's definitely something kind of epic over there. Demented too, but that's a whole other thing. But I think he's a lot smarter than he's letting people know, because he has to play the retard. He has to do that. So then he can't be held to account because he's feeble-minded. You know that. People, you can't make any of this up. I dare you to do it. So anyway, going back to what I was saying, watch that 10-year yield. All right, this big jump that we've had, if this continues, you're going to see the stock market take a pretty big hit. We watched it before. An uncontrolled sell-off in the debt market is going to happen at one point, and it's going to be sustained. And of course, a lot of effort is going to go in here to stabilize the debt market. ECB going to increase whatever they're doing over there. So is the Fed. And the more they do this, the more inflation they're going to create. But remember what they said. They're really concerned about containing inflation, and we're going to contain it. Yeah, we're going to contain it. What they mean is they're going to maintain it, okay? And they're going to increase it so they can strangle you to death. Me included. Both of us. They look, is there any, do you doubt for a moment that they want us dead? They want us dead, okay? Or slaves, one of the two. If they can't make you a slave, they want you dead. Make that up. And tell me where I got that wrong. I would be willing to bet that you would agree. All right, look, so whatever. Let's reconvene right here again tomorrow morning. Yeah, I think that's what we should do, because I don't know about you, but I need a freaking break. All right, this guy, and I mean this with all my heart, loves all of you a lot. I really, really do. Again, thanks for your support. Always, you people are amazing. And I will do my best to stay sane, so at least I can continue doing these video blogs. I'm on the edge. I think you all know that. See you in the morning.